Hey everyone, it's Nick from Us vs. Herd. Thank you so much for watching this video. If this video is of value to you, please hit that like button. If it's your first time here, hit the subscribe. For those who are already subscribers, thank you so much. Thank you so much for joining our free options trading group. If you're not yet a member, the link is actually below. We post a lot of trades there, trying to bring the whole community together. I want to meet all of you. It's an easy forum just to discuss stocks and just meet everybody. I found, including our live streams. But what I want to talk today about is the Robinhood break-even price. And one of the misconceptions I get a lot, or a lot of questions I get, is saying, "Hey, Robinhood is saying my stock, my break-even price is another thing, but I'm already up money on my contract, even though it's not by my break-even price. Like, how does that work?" And I think that one of the biggest mistakes that Robinhood did was put the break-even price on their options chain. Like no other platform has this. But we'll get into it here. As you can see, market was a little mixed today. Had some big gains, and then we had some news, and kind of went that way. I am about 44% on this account. I do. My main brokers are actually Tastywork and Thinkorswim, are my main platforms. I do trade some stocks and options, as you can see here, and we're just working on getting some. We were up in the 50s, but now we're back in the 40s, so we're working on getting that back up there, but looking good here. I'm actually going to use Apple as an example just because it's nice and easy here. We'll go to trade options, and this is the same on, I'm using the web platform, it's the same on the mobile. There's no difference, same thing. And let's get to it here. As you can see here, this is the options chain. If you're not sure what these are the break-even price to break-even, and we'll go over this. But if you're not sure, this is the percent change. Now, this percent change relies on the option. How much did this option contract go up today? So let's look at this 232.50. So this setting it up 140%. So if you bought this option yesterday and held it into today, this option's up 140% from yesterday. So if you're still holding this into the close today, you're up 140%. Definitely you can take profits when you want, but if you're still holding, you're up 140% is what that means. So these two columns here relate to the option price, and these two columns here, the break even, the to break even, relate to the stocks. And the break even price only relates to the price only if you exercise the option. And how they get the price of this is it's 227.50 plus the so we'll actually focus on this 227.50 here just because it's nice and clean, unlike some of these other ones. So it's 227.50 plus $1.50 equals $229. So just to do the math here, just for those visual learners, 227.50 plus $1.50 equals 229. So they're saying if you exercise this, so if you exercise it, you need to be 229 or better to be profitable. But most people don't do that. Most people, like myself, most people like you just trade the option. You don't want to exercise the stock, because if you do exercise the stock at 227.50, you're gonna have to pay about 22,000 times 100 shares here. So you're going to have to pay $22,750 to own the stock to go up. To go up to 230, 229 to break even, and then 230, to make $100 on your share. When you, like, this option went up 72 cents today, almost $100. It's still below the break-even price, but it's still up money. I'm not sure what these were trading at yesterday, but these are probably trading at, I'm guessing these were, let's see, it's $1.50, 72. Let's just say it was 75 cents. So these are trading at 75 cents yesterday. They're now trading at $1.50. So these are trading around 75 cents. So the break-even price yesterday, how to figure that, was 227.50. And I'm just rounding up to 75 cents just to make it easier. Plus 75 cents. The break-even price yesterday was 228.25, but as you can see here, it's almost doubled up 92%, and the stock closed at 225.11. So you would have made 100%, still below the break-even price. So you see how that kind of works there. So yesterday it was at 228.25 for break-even price. However, the stock right now is trading at 225.11, but the option is up 92%, up 72 cents today on that. So that's how that works. I hope that clears some up for you. If you guys have questions, definitely leave it below. I know this is confusing, and I don't exactly know why they put the break-even price and the 2 break-even percentage in here, knowing that most Robinhood holders are not going to exercise their contracts. Now, if you want to exercise it, that's fine, and that would be your new break-even price. But most option traders, they just trade the contract prices because, hey, if you're profitable already, why take that much risk? Why take $22,000 worth of risk to make $100 when you could have easily just made almost $100 here today alone? So, that's all I wanted to share with you. Hope that clears some up. Hope I can point some people to this video. Like I said, if this video was of value to you, please hit that like button and smash that subscribe button for me.